2024 was a global turning point for monetary policy. After 2 years of massive policy tightening, central banks began to ease policy pretty much across the board. But what might be in store for 2025? Going into next year, futures curves for SOFR, Euro-Ester, and analogous products in other markets suggest that traders still see some room for further interest rate reduction in the United States, the Eurozone, the UK, Australia, and Canada. But recently, traders have curtailed these expectations for rate cuts. So what's going on? While inflation is way down from its peak levels in 2022 and 2023, it stopped falling in many countries and remains anywhere from 1% to 2% above its levels before the pandemic. In the US, for example, core inflation has stabilized at around 3.3% for the past 6 months, while its pre-pandemic level was typically closer to the Fed's target of 2%. This creates a dilemma for the Fed and other central banks. On the one hand, they might like to cut rates further, especially if economic growth slows in response to their policy tightening in 2022 and 2023, which was the largest in over 40 years. On the other hand, persistent core inflation might give them pause, especially if further rate cuts risk igniting second rounds of inflation later this decade.